Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CBIZ INC quarterly report. CBIZ Inc. provides a wide range of business and financial services to various clients across the United States and Canada. The company's services include accounting and tax, financial advisory, government healthcare, consulting, employee benefits, consulting, payroll/human capital management, property and casualty insurance, retirement and investment services, information technology, managed networking and hardware services. These services cater to small and medium-sized businesses, individuals, governmental entities, and not-for-profit enterprises. The decline in CBIZ Inc.'s stock price over the past year can be attributed to several key factors. The company's disappointing earnings reports, including Q2 2024 and Q3 2025, have significantly contributed to its stock drop. In both quarters, revenue fell short of analyst expectations, with Q2 2025 also experiencing a significant plunge due to integration costs from the Marcum acquisition. Additionally, CBIZ has faced ongoing concerns about its financial health, including high debt levels and declining free cash flow margins. Analyst downgrades, such as Weiss Ratings' downgrade from hold to sell, have further exacerbated investor worries. The repeated hitting of 52-week lows in the stock price has also reflected the market's growing skepticism towards CBIZ. Overall, a combination of disappointing earnings reports, revenue shortfalls, and broader financial concerns have led to the significant decline in CBIZ's stock price over the past year. The primary drivers of revenue growth or decline can be identified from the financial summary provided. On the growth side, several key factors contributed to the increase in revenue. The acquisition of Marcum LLP was a significant driver, generating $840 million in revenue from its operations within 9 months. Additionally, the financial services practice group saw a 79.5% growth in revenue, primarily due to an increase in traditional accounting and tax-related services, advisory services, and national technology services. The unbilled revenue at net realizable value also increased by $150 million, while trade accounts receivable rose by $55.6 million. Furthermore, fees earned under the ASAs increased by $311.4 million. On the decline side, the loss of consulting revenue resulted in a decrease of $0.6 million and $4.1 million for the 3 and 9 months ended September 30, 2025, respectively. Overall, the acquisition of Marcum LLP and the growth of the financial services practice group were the primary drivers of revenue growth, while the loss of consulting revenue was the main driver of decline. Net income and profit margins changes. A mixed picture. The financial summary reveals a mixed picture of net income and profit margin changes. For the first 3 months of 2025, net income decreased by $4.9 million, 12.6%, compared to 2024. However, for the first 9 months of 2025, net income increased by $63.1 million, 48.1%. This significant increase is attributed to Marcum's results of operations, which added $840 million to net income. Profit margins also showed contrasting trends. For the first 3 months of 2025, gross margin decreased from 16.6% to 13%. In contrast, for the first 9 months of 2025, gross margin increased from 18.2% to 18.4%. The improvement in profit margins is evident in financial services, which saw a 0.8 percentage point increase, and benefits and insurance services, which turned a loss into a gain. The mixed picture suggests that the company's financial performance has been influenced by various factors, including changes in operations and market conditions. The company's financial performance indicates a decline in its ability to generate positive operating cash flow. In contrast to the previous year, the company experienced a shift towards negative operating cash flow in 2025. This change suggests that the company is struggling to manage its expenses and maintain profitability. But the company's debt level has experienced significant fluctuations over the past year. While it initially decreased by $17,555 in September 2024, long-term debt increased from $1.33 billion to $1.5 billion. Furthermore, the average debt balance for $3 million and $9 million 2025 was significantly higher than the previous year, with a notable increase of $1.2 billion. Concurrently, interest expenses have also seen substantial growth. The change in interest expense increased by 433% from $15,363 to $80,983, indicating a significant rise in debt-related costs. This trend continued throughout the year, with an increase of $23 million for 3 months and $65.6 million for 9 months ended September 30, 2025. The company's financial performance reveals areas of concern. National practices experienced a decline in revenue, with a decrease of $0.6 million over 3 months and $4.1 million over 9 months. Financial services also showed no improvement, lacking specific revenue or pre-tax income data for both the 3 and 9-month periods. Additionally, benefits and insurance services and corporate and other segments failed to provide clear performance metrics, leaving their financial standing uncertain. Management's outlook on the company's strategy is centered around several key initiatives. The company plans to adopt new accounting guidance by December 31, 2025, and has entered into new credit facilities with higher interest rates to support its growth ambitions. To manage risk, management will utilize interest rate swaps to mitigate exposure associated with floating rate debt. Additionally, the company intends to make strategic acquisitions to strengthen its presence in existing markets, expand into high-growth industries, and broaden services to existing clients. Management prioritizes maximizing cash flow to fund working capital, drive organic growth, and pay down debt to increase liquidity for future acquisitions. The company plans to use available funds under credit facilities for future strategic initiatives, including acquisitions and share repurchases. Overall, management's strategy is focused on driving growth through strategic investments while managing risk and maintaining financial discipline. The company's financial activities include significant acquisitions and divestitures. Notably, it made purchases totaling $35.6 million for the 9 months ending September 30, 2025. Additionally, a notable acquisition was the Markham deal. On the other hand, the company recorded redemptions of $3.525 billion for the same period. That concludes the financial summary for CBIZ INC. Feel free to comment below, and I will be happy to answer them when possible.